Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, October 31st, 2023. As always, we'll start with our executive summary from today's leadoff morning note. If you want the analysis supporting these conclusions or what to actually do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with number one, two major global macro catalysts that had the potential to spur incremental bond market volatility were better than which were the BOJ's October 31st decision and the Q4 quarterly refunding announcement by the U.S. Treasury. Number two, Governor Ueda of the BOG and his board made only a minor tweak to its yield curve control framework, removing the hard cap of 1% on the 10-year JGB yield as a trigger for unlimited, unscheduled bond buying. The Japanese central bank now sees 1% as merely a reference point. When asked if he could see JGB yields in the 1.5 to 2% range, Governor Ueda suggested that was unlikely, implying more intermittent QE at yields not much higher than current levels. And then finally, number three, the preliminary quarterly refunding announcement delighted bond investors with a downside surprise in the Q4 borrowing estimate to a net $776 billion, down from the $852 billion it predicted in July, thanks to deferred tax receipts from California and other areas impacted by natural disasters. It expects to increase borrowing in Q1 to a net $816 billion. Tomorrow, we will receive the Treasury's estimates of coupon and bill supply. Obviously, an upside surprise in coupon supply will weigh on Treasury bond prices, but we see that as unlikely in the context of $1.1 trillion of excess liquidity in the reverse repo facility. Transitioning to my loan bow dashboard, just giving you a quick rundown of global macro. Not much to call out from the perspective of the trading ranges. As you can see here in the range view, nothing's really overbought, oversold. You're getting a near oversold signal here in crude oil, so just be aware of that. If to the extent you're playing this market, if you believe in this geopolitical conflict as having the potential to create a sustained bull market in energy, this would be a good spot to start thinking about buying the dip there, and then in terms of an asset that still has medium-term price momentum. And then lastly, we'll wrap up, get you out here with some S&P ranges. So S&P is kind of closer to the bottom end of its range. You got about 40.59 on the bound side, 4,400 or 40, right around 4,400-ish on the upside there. So we'll wrap it up there. Darius Dale presenting our macro minute for Tuesday, October 31st, 2023. Best of luck out there today. Everyone have a wonderful day. And we probably won't catch you back here tomorrow because I'm going to be traveling all week for work. So we'll chime in when we can to the extent that we can, kind of meet the minds can meet in the middle on scheduling. But to the extent not, obviously, we'll be supplying you with our leadoff morning note throughout the week as well. So wrap it up there. Everyone have a great day. We'll catch you back here when we can. Cheers.